Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Good gains for the market. We're above the 26,000 mark right now. We also touched the 26,100 mark, retreated from those levels, but it's a green-looking screen all around. And we are getting some earnings reactions as well today.
That's right. Good afternoon, Sonal. Slightly off, lifetime highs. That was the hope that we came in today morning, and that was the hope we came in as far as somewhat 2082 was concerned. Despite that, a very strong start as far as markets are concerned today. We have a lot lined up on the show, some important conversations as well with key market voices. So let's start off with the top headlines. Stocks climb on US-India trade deal hopes amid indications of India easing back on Russian oil exports. IT and financials gain even as energy drags. Mid-caps are relative underperformers.
Shares of Bharat Forge surge as reports suggest that the company and PLR Systems win a 2,770 crore rupee order for close-quarter carbines from the Indian Army. These will replace the old Sterling rifles as part of the Army's modernization effort.
EPAC Prefab surges in trade after reporting a strong set of Q2 numbers. The company's revenues went up 61% on a year-on-year basis, while profit jumps multifold. Order book for the first half of the financial year stands at 655 crore rupees.
Vardhman Textiles shares surged up to 9% in trade on optimism of a trade deal between India and the US after US President Donald Trump says that India will bring its Russian oil imports to almost nothing by the end of the year.
Indian OMCs and refiners in focus after US imposes fresh sanctions on Russian oil companies in a bid to negotiate a peace deal in Ukraine. Stocks like IOC, HPCL and BPCL lose over 1.5% each.
All right, those are the top headlines that we are tracking for you. For the Nifty, it is at 26,030, almost an 80-point downtick from the highs of the day. We'll have to see whether we sustain above the 26,000 mark today or not. The mid-caps are 0.4%, but they also have come off from the highs, and the advance decline ratio is absolutely flat. As many advances, as many declines that we are seeing in the market today. The Bank Nifty doing well, but again, those lines are converging, so that will be important to track. But we do have our special segment, Mid-Cap Movers. Sudarshan is here to take us to the mid-caps that are moving around in trade. Sudarshan.
So it's a good day of trade. Overall, market is holding on to the gains. Nifty is trading much above 26,000. But let's take a look of some of the mid-cap names which are moving the trade. First, top on the list is Bharat Forge, currently up almost 4.5%. And it's on the back of the order win that company has got from Indian Army. And total order win is worth 2,800 crore, but 60% of that would be going to Bharat Forge. Next two names, Gokaldas Exports and Westman Living textile companies on the positive trade talks. These stocks are also moving higher, up somewhere in the range of 6 to 8%. NMDC has slipped, and the reason is the company has taken a price cut for both lumps and fines, and that's in the range of rupees 500 to 550 per ton. Dixon Technologies has been moving lower continuously after the earnings were slightly missed on against expectations, and company has also seen a downgrade. Today also CLSA has downgraded the stock, and on the back of that you are seeing that currently it's down almost 3%. Some of the more names which are moving higher, first on the list is Vodafone Idea. Remember, on the Monday, Supreme Court is going to hear the case related to AGR, and ahead of that, the stock is up almost 6%. Next on the list is Info Edge, tracking the gains that all the IT names are seeing, and on the back of that, Info Edge is moving higher as well. PSU banks have been seeing buying today also. Most of the names are trading with gains, and Bank of India is one of the top gainers, currently up almost more than 4%. Bagadia Industries up 13% with healthy volumes. Similar can be seen with SCI, that is also more than 7% with huge volumes. Some of the mid-cap losers, top on the list is Muthoot Finance. All the gold financiers are down in the trade. That's mainly because of the sharp downtick that we have seen in gold prices over the weekend. At one point on Friday, gold was above $4,300. Now it's below $4,100. On the back of that, you are seeing a downtick coming in Muthoot Finance, down almost 4%. Hindustan Copper, similar to gold, all the other metals also have moved lower, and that's the reason Hindustan Copper has also moved lower. Fortis Healthcare, that's seeing profit booking after a big move that the stock has seen over the last few months, and today it's down almost 4%. And last on the list is HPCL. All the oil marketing companies are down. There are two reasons. First, crude has moved higher, and second, there are talks of curb on Russian imports of oil, and because of that also all the OMCs are down.
Yes, these stocks are on our radar. Remember, the Russian import in terms of crude was around 30% in India. We'll have to see what the updated number is, but that's an important story that we are tracking. Thank you, Sudarshan, for joining us as always with that list. With that, let's go across to Sudeep Shah from SBI Securities, who is joining us on the show for a technical check on the market. Sudeep, good afternoon. What do you make of the next important level? Do you think we'll continue to sustain about 26,000 and maybe touch those fresh time highs as well?
Good afternoon, Sonal. Yes, I do feel that because see the way markets have been shaping up in the last 8 to 10 sessions, the rally from 25,300 to current levels of 26,100, 26,000 has been in last 4 or 5 days. But before that, there was a decent enough consolidation that has happened. So we feel that a base has been built, and from here on, we might see some kind of a minor consolidation because the trade deal talks of getting finalized are out, but the exact contours or when and how it will be signed there, that's not yet out. So I feel markets may just have a wait and watch approach before that. But overall structure now remains quite improved, and we feel now 25,800, 25,830 will act as a decent support on the downside. And till that is held on the upside, 26,180 and 26,300 levels can be witnessed in the next 4 to 5 trading sessions.
Right. Good afternoon, Sudeep. Thank you so much. Well, you've spoken about the market levels. What we want to understand from you are your individual trading picks for the day. Are they intraday picks or positional picks?
Vivek, a couple of positional names that are coming up on the charts. One is from the auto ancillary space, that is Bellrise Industries, the recently listed. So there was a decent move up to 165. Post that, the stock retraced back to 148, 150 levels, and now the stock has shown some signs of a rebound from lower levels. So we feel that this stock could do well, can be bought with a stop loss at 150 for a target of 160, 162 in the next couple of weeks. The other name that is there on our radar is Samvardhan Motherson. Now here also we have seen a decent breakout out of the consolidation that the stock was in the last 15 odd trading sessions. And the breakout is backed by strong volumes, and the delivery markings have also improved in the last few sessions. So we feel that this stock can be bought with 106 as a stop loss on the downside, and 114, 117 could be the potential targets on the upside in the short to medium term.
Right. Thank you so much, Sudeep, for joining us, giving us a view on the markets as well as your individual trading picks. Moving on, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Let's talk about the big story, the US sanctions which are coming on two big Russian oil and gas companies, Rosneft and Lukoil. What the impact could be on overall Indian refiners, because right now, remember, around 30% of total imports are coming in from Russian oil and gas companies. What the impact on the entire oil and gas space be, and individual names like HPCL, MRPL, we have the other oil marketing companies as well. Prashant Vashisht, who is the Senior Vice President and Co-Group Head of Corporate Sector Ratings at ICRA, along with Ajay Dua, who is the former Union Secretary of Commerce and Industry, is joining us now to discuss more. Gentlemen, good afternoon. Thank you so much for joining in. Prashant, let me start with you first up. What do you make of these sanctions that have come in? Remember, European Union had done it last year. We had UK as well, who made some sanctions on these Russian oil and gas companies. What is the impact on overall oil and sector in the country, and any individual names do you think will be severely impacted because of this?
Now that some of the Russian producers have been formally sanctioned by the US, it would be difficult to purchase oil from them. And accordingly, some of the purchases that India was doing from Russia would be impacted and would have to be cut down.
Okay. Mr. Dua, first up, thank you so much for joining us. What we want to understand from you, sir, is number one, what was the kind of discount that India was enjoying when it was actually purchasing, oil from Russia? And we also understand that a large portion of that particular discount had actually faded away in the last few months. So given that, what is the kind of hit that you feel India would have to take in case these sanctions, or given the fact that these sanctions are now come into effect?
Thank you for having me on the discussion. The discount which we have got availed of in the last 3 years, ever since the sanctions were imposed subsequent to the Ukraine war starting, were fairly substantial. These had to be kept under the cutoff level of $60 a barrel, and Russia had invariably, in order to ensure that India continues to buy from it, kept the price below it, even when it had gone up to $65 to $66. Yes, of late, the discount had been reduced, but we continue to buy a fair amount of oil from Russia, and that some of it we've diversified, including we've been buying the US crude oil, and of course our traditional suppliers in the Gulf. Now, as things move forward, I think India would have to accept the situation that Rosneft and Lukoil, first upon them, UK had imposed sanctions last week, and yesterday, the US, though they come into effect from the 21st of November, giving us enough lead time to make the adjustments. But it is going to affect us for the simple reason that the biggest supply exporter from Russia of crude oil is Rosneft. It might be a very large producer. Also, 6% of the global crude gets produced by just Rosneft. In addition is Lukoil, which is fairly large as well. So sanctioning of that in two ways is going to affect us. One, make it difficult for us to continue to import from Russia. And second, the global supply itself of crude oil will get impacted, causing an increase in the crude price, international price of Brent, NYMEX, whatever.
Take that point, Mr. Dua. Earlier we were speaking with Mr. Surana as well, who's the ex-CMD at HPCL. He indicated that maybe there's enough supply in the market for not to impact the crude prices so much. But I do take your point on discounts, because that is something that most of the refiners were enjoying, and that was showing in their refining margins as well. So, Prashant, let me take this forward with you. What was the discount that Russian crude was allowing earlier? How much lesser is it currently? And do you think refiners will take a major hit because now they will not get this discounted crude?
As per when initially India started buying crude from Russia, the discounts were quite substantial, in 2 digits at $15-16 per barrel as well. But of late, these had shrunk, given that more and more countries were buying. A lot of other countries were also buying from Russia, namely Turkey, etc. And the discounts had reduced to about $2 per barrel. Now, if we look at about 35-36% of the supply coming from Russia at that kind of a discount, the impact on the overall oil import bill is not very substantial. It is just less than 0.5%. Yes, so if we replace this crude with market price crude, the impact would not be very large. Secondly, the other point to note is that though this will impact at a gross refining margin level, the marketing margins continue to remain healthy given that crude prices have come down substantially from March end due to various factors. And accordingly, this should not be a huge hit on the profitability of the oil marketing companies.
Right. Mr. Dua, like Prashant just mentioned, probably not an immediate hit as far as earnings are concerned for the companies. But given the fact that, both of these companies were significant suppliers to the global market, you also saw a sharp reaction in crude oil prices overnight. So in that case, do you see, the import bill, number one, rising? And number two, who are the other suppliers that India can look at apart from the US as well?
I'm one with you on the impact of the sanctions upon these two entities of Russia. Yes, they are large suppliers. As I mentioned, the Rosneft's entire production of one company forms more than 6% of the global supply. If it is taken off the market or gets off the market or halves it, it is going to impact the global prices. How much will it be also depends upon the continuation of the demand. If the world doesn't grow well, it continues to be slowed, its activities, economic activities remain slow or laggard as at present, maybe the impact to some extent will reduce. But let's not deny that it is going to be there. Second, now, how does India handle it? India will have to handle it in two manners. One, turn to its traditional suppliers in the Gulf and in the Gulf, Africa, as well as in Latin America. But there is an excess capacity in Saudi Arabia, refining capacity. And I think it is not only just refining, the crude capacity itself. I think India could probably increase its imports from Saudi Arabia, and just as well. Second, if the US prices, including the logistics cost of transportation, get moderated, it would help us to do that. And I'm of the opinion that let's also look at the cost of the US continuing to levy 25% extra penalty on us because we continue to buy from Russia. If our imports from Russia reduce or start reducing, we might take some time over it. Maybe President Trump would relent and remove these 25% due penalty upon us, and understanding that it cannot be done overnight, but the tendency is very clear, the intention is there. We are going to then benefit in terms of our exports back to the US, which have been taken off of our $80 billion, about 40 to 45 billion are hit. Our labor-intensive items have been hit. So let's look at the overall picture. Yes, we were willing to buy the Russian oil. We have long tradition of buying defense equipment, other stuff from the US or from Russia, with which we have had a good partnership. But if it has been made difficult for India to continue with it, we have very few options but to make the best of the situation. And I think if the side benefit is that the US would relent, we would probably make some money exporting there, what we might be losing because of moving away from the discount and the higher prices in the global market.
So you said Rosneft is around 6% of global supplies as well. If that amount of crude also goes away with Lukoil, it would be even a higher number. And would that not impact crude prices overall? So even if that means we are importing from the US, we'll still have to pay higher prices, higher than what we've been paying to Russia as well. So ultimately, it'll be a negative impact on our books, India's books overall?
Certainly. I have no doubt about that the sanctions would affect us because of the two ways, as I said. One, having to buy from elsewhere. Second, the overall impact of the global price on the global prices. provided that demand continues to remain robust. If the global demand itself falls, then we may not see such a high rise in the global prices. Second, I am emphasizing once again the side benefit for India to move away from Russian oil. And that's not what we wanted to do. We had resisted it so far, is the fact that Mr. President Trump may have to remove the 25% duty penalty upon us, which will make our exports to the US easier and cheaper. And I think we might be back in business with the US.
Well, thank you so much, Mr. Dua. Thank you so much, Prashant, for joining us and giving us your views on this developing story as well. Be important to track, what are the key developments as far as the oil market is concerned going forward as well. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Well, a couple of results that came in over the last couple of days. One of them was EPAC Prefag. The other one was Jain Resource Recycling. It's a recent listing. Nigel joins in with more details, and it's the Mid-Cap Spotlight stock of the day.
Well, that's right, Jain Resource Recycling. Well, the company had listed on the 1st of October. And from the IPO price, in fact, it's up close to around 60%. So it's had a massive move. Keep in mind, some of these companies post their IPO, most of the shares are locked up and promoter holding is high in the company as well. So there could be an element of free flow that's playing out here. However, the numbers that came out looked quite good. So on the revenue front, the growth was to the tune of around 50%. But the EBITDA number popped up by close to around 80%, telling you that margins from around the 6.5% odd band, it clocked close to around 7.6%. So there was a 100 basis points improvement in terms of the margins. The profit number as well jumped up by close to around 88%. Moving to the few factors then, and if you just look at the segmental breakup, the aluminum business is very small out here. But on a low base, that grew very well. Lead as well as copper business, both of them delivered growth of around 40 to around 70%. And there was some margin expansion as well that we saw on both those two segments. So both lead as well as copper, that constitute close to around 45% apiece in terms of revenue contribution. They saw a good growth, and that explains why those numbers look good. Now, the first half of the year, the EPS that they've already delivered is around 5 rupees. For the last entire year, they delivered around 7.2. And as you can see on the screen, the second half of the year is traditionally better. So the street will work with a number on EPS of more than 10 rupees for this year, and there'll be some interest cost savings as well. In addition to that, the return ratios are quite healthy. Both the ROCE and the ROE are holding above 20 and 40%. So put everything together, the newly listed company, Jain Resource Recycling, coming out with a good set of numbers. Float is limited as well, and the stock bouncing up more than 60% from the IPO price. Back to you.
Thank you so much, Nigel, for joining us and giving us a sense of how exactly the Q2 results of Jain Resource Recycling panned out. Well, with the news that the market has slipped off the day's high and Nifty hovering around the 26,000 level. With that, it's all the time we have on this edition of Mid-Cap Radar, Mutual Fund Corner, when we return.